What is up, guys? This is Ola Trades, and in this video I will be continuing the second part of that video based on candlestick patterns. So I did not cover the indecisive pattern and also the continuation pattern. So in this video I will be talking about those two. So let's move to it. So in a continuation pattern we have three rising methods. So this is for a bullish market. When the market is trending up, how can you, and you see the market is reversing a little bit, which is showing that the market is making a correction. So how can you know where to get in to continue with the trend of the market, which is bullish? So these three rising methods of three candles shows that the market is definitely reversing, and once you find a bullish candle, that indicate that that market is ready to move, but you have to confirm it with some other confluences, which I will be showing you how to. And the same thing is the opposite for the bearish market. You are seeing the market is getting bearish, and you see the correction of the bullish candles forming. Do not panic. Whenever you see that the market make a red bearish candlestick, you should that should indicate to you that that market is ready to move to the downside. So right now I will be showing you where you can find potential stuff like that. Looking at this market right now, which I will be going to my um my step index market. So I will be showing you how to go with this. So for example, looking at this market here, as you have seen my trend line, I drew it as this market is going down for the meantime, which shows that this market is bearish. So I want to find an opportunity to enter this market. How can I do that? That is where what we discuss right now, which is the continuation pattern, that's where it comes in. And how can you find that opportunity to enter? By drawing your counter trend line. That's just it. How can you draw your counter trend line? You see that the market is moving at a downtrend and you want to find opportunity to enter the market. What do? Just simply draw your counter trend line that will help you to find the opportunity to enter the market. And what happens? As you can see, drawing your counter trend line on the wicks of the candle, as you know that that's how we do it. So having our counter trend line drawn, once that counter trend line is broken and it breaks with the body, not the wick, that should indicate that that market is ready to sell. And what happened? As you can see, this market sold, though for the first 1 hour the market wasn't selling, and for the first 2 hours you are probably in loss. But look at what happened for the next couple of hours. I mean, comparing what you could have made from here to just the loss that you could have had from here is very small if you apply proper risk management. So this is how you find continuation patterns for a bearish candle. Let me find another place for you to know that this actually works. As you can see, the market has been trending down. So what do? Just bring out your counter trend line and draw it. And what happened? As you can see, this is a perfect example. As you can see that the market did not break it here, which shows that the wick closed for the counter trend line. The body did not close below the counter trend line. So that is indicating that this market is not ready to go down. Plus, this is a bullish candle. So we shouldn't be entering there. But as you can see, the next candle, what happened? You can see that it formed what? A bearish candle for us, giving us a bearish engulfing pattern that is indicating a signal for us to sell. And what happened? Though you were in profit for the first 2 hours and for the couple amount of hours again, you were in loss. But look at how much you could have made at the end of the day. Because one thing about the market is that even if you see your setup, you see everything is okay, there are some times that the market is just not giving it to you. The market is not ready yet at the moment. And there are some times that the market will go straight to your take profits. So sometimes it doesn't go that way sometimes, and sometimes it goes that way. So you have to learn to be disciplined and be patient and be calm whenever you are trading, even if you are in loss. As long as you know that your analysis is correct, then you should know that you have nothing to fear. So this is an example of that, and what happened, the market went right down. Let us find another example for you to know that this strategy actually and definitely works. So I will be going into another instrument. Okay, let's use the same instrument on a 15 minutes time frame now. See, the market is trending down. You are looking for opportunities to sell. Where could you have sold this market? This is where you could have sold this market. As you can see here, this closed with a body, though it was so small. It was so small, as you can see, it was small, though it closed with wick here, but it's reversed. And as you can see, it closed with a body below that counter trend line. So these are the things that you should focus on. Whenever it closed with a wick, you shouldn't enter yet. But once it close with a body below it, you should enter the trade and sell the market for a bearish market. So these are the tips that you need when trading the market. So what about for a bullish market? The market is bullish, it's trending up. Where can you find the opportunity to enter? This is what I will be showing you on Jump 10 index. As you can see, we on a higher time frame are bullish. So how can you find the opportunity to enter when you see the market is making correction or is reversing? So this is where you draw your counter trend line. So I will be drawing my counter trend line here. As you can see, what happened? The market was bullish here, but there are some times that due to momentum or the reason, the market might actually could not go your way, and it's fine because that's the market. But look at, if you could have entered another opportunity, you could have found another opportunity here. Look at how the market did it, break above it, and for the first 5, 10, 15, 20, 25, 30 minutes you were probably in loss, and look at how much you could have made for the next couple of minutes. So this is how you identify the counter trend. Another place that you could have identified this counter trend line is here again. So this is where you draw your counter trend line again, and if you draw this on the higher time frame, that is the best place for you in order to make money. And as you can see, when you entered here with the body closing above the counter trend line, though you were at loss for the first 15 minutes, but what happened for the next couple of minutes? In 5 minutes you were in profit. So this is how you use the continuation pattern. Now what about the indecisive? This indecisive, they are dojis or shooting top. So you find them when the market is indecisive. The market is not selling, the market is not buying. Don't know what the market is doing. For example, look at what we have here. This is formed like a doji and something here. You can see that the market, the price, the body of the candle closed at the average of the whole candlestick. So which means that the market is indecisive. The market doesn't know what to do. So this helps you to know you at this place that you should wait for a correct signal to buy or either sell. And all these candlestick patterns that we have mentioned, you should come to realize that this candlestick actually, you should use them with confluences with your trend line, your support and resistance, your Fibonacci. This will help you when you have your confluences with your candlestick backing you up, then you'll be able to make profits in the market. Till next time, peace out.